Overconfidence and ego in investing, a hidden risk to your investment. Have you ever thought to yourself, I've been successful before, so I can handle this? While confidence is key in investing, overconfidence can be a dangerous trap, especially for experienced investors. In today's video, we'll discuss how overconfidence and ego can cloud your judgment and lead to missed opportunities, and more importantly, how to overcome this mindset for consistent success. Welcome back to Online Investment Compass. I'm Happy Kapoor, and if you're an experienced investor but still finding it hard to consistently make a profit, this video is for you. Overconfidence and ego often get in the way of sound decision-making, even for the most seasoned traders. Today, I'll explain why humility is crucial for long-term success and how to adjust your mindset to avoid the common pitfalls that come with overconfidence. If you're new to the channel, make sure to like, subscribe, and hit the notification bell so you never miss an important update. Let's get into it. As experienced investors, we know the feeling of success. After a few good trades or successful investments, it's easy to fall into the trap of thinking we have everything figured out. But here's where the problem lies. It's natural to feel confident after a string of successful investments, but that confidence can morph into overconfidence. When you've experienced success, it's tempting to think that you've mastered the markets. But the truth is, past success doesn't guarantee future results. What worked before may not work now, and failing to adjust your strategy for changing market conditions can lead to significant losses. Markets are dynamic and constantly evolving. New risks emerge daily, whether it's changing economic indicators, geopolitical shifts, or emerging technologies that disrupt established industries. Overconfident investors often fail to see these risks, believing that their tried-and-true methods will always work. Unfortunately, ignoring emerging risks can lead to poor decision-making and ultimately, missed opportunities. When ego enters the picture, investing becomes more about proving yourself than making rational decisions. You might hold on to a losing trade because you don't want to admit it was a mistake, or you might take on higher risks to prove to yourself or others that you can still beat the market. This emotional attachment to investments clouds judgment and creates a cycle of rash decisions that hurt your portfolio over time. So how can you overcome overconfidence and ego in investing? The answer is simple: humility. Here's how to cultivate a mindset of humility and adjust your strategy for better outcomes. No matter how experienced you are, the market will continue to evolve. The biggest mistake experienced investors make is assuming that past strategies will always work. The best investors know that they must adapt to new market conditions, and they're constantly learning. By acknowledging that you don't know everything, you open yourself up to better decision-making and increased opportunities. Overconfident investors often chase quick gains, but this approach rarely leads to long-term success. Instead, focus on your long-term investment goals. Build a strategy that's aligned with your objectives, and stay patient. The most successful investors don't obsess over short-term fluctuations. They understand that wealth is built over time, with a disciplined, strategic approach. No matter how confident you feel, risk management should always be at the forefront of your strategy. Set stop-loss orders to protect against unexpected downturns, and diversify your investments to reduce the impact of any single loss. Remember, risk isn't something to avoid, it's something to manage. By doing so, you prevent overconfidence from leading you to take on unnecessary risks that can damage your portfolio. Overconfident investors often make decisions based on emotions or biases, rather than facts and analysis. It's crucial to stay objective and data-driven in your approach. Whether it's technical analysis, fundamental analysis, or both, make sure your decisions are rooted in sound reasoning. If your emotions start to take over, step back and assess the situation logically. One of the most humbling things an investor can do is learn from their mistakes. Instead of letting a loss fuel your ego or make you defensive, take it as a valuable learning experience. Ask yourself, what went wrong? Was there a signal I missed? Did I ignore emerging risks? By analyzing mistakes and learning from them, you grow as an investor and avoid repeating the same errors. Track your trades and reflect on why you made certain decisions. Include your emotional state at the time of the trade, and assess whether overconfidence or ego played a role in your choices. This will help you recognize patterns and adjust your behavior over time. It's easy to get caught up in your own perspective, especially if you've been successful in the past. To combat this, seek feedback from other investors, mentors, or trading communities. A fresh perspective can challenge your thinking and help you stay grounded. Don't fall into the trap of thinking your strategy is always the right one. Regularly review your portfolio and performance. If things aren't working as well as they should be, it may be time to adjust. Be open to evolving your approach based on new information, market conditions, and lessons learned. Humility in investing requires patience and discipline. Don't rush into trades and don't let past successes push you to take on more risk than is necessary. Trust your strategy, be patient, and allow your investments to grow steadily over time. In investing, humility is just as important as knowledge. Overcoming overconfidence and ego will not only make you a better investor, but it will also increase your chances of long-term success. Remember, the market is always changing, and so should your strategy. By staying humble, continuously learning and managing your risks, you'll be better equipped to navigate the complexities of the market. If you found today's video helpful, please hit that like button, subscribe to Online Investment Compass, and share your thoughts in the comments below. How do you manage overconfidence in your trading? Let me know, and I'd love to help you further refine your strategies. Until next time, stay humble, stay disciplined, and invest wisely.